Hey everyone, Tony here again. Wanted to give another video update on Tesla, and above all, I just wanted to mostly I just want for this to be a public service announcement more than anything else. Kind of like my video yesterday with Virgin Galactic. Um, it's gone a little bit too far too fast in my point of view. That's just the way I see it. We can actually see on the monthly here, you have, some divergence here. Let me see if I can draw it off for you guys. So on the monthly, you have some, now obviously we have to see what ends up happening here, but we have, pretty much higher highs in price, lower highs in the RSI. That to me is a big sign. Same thing happens here with the stochastic. So it's not fully confirmed, but it's right there. So, I mean, you really even had it back here. So it's not a full death sentence, but it's not a great sign. So that was my big thing. So this is only on the weekly. So let me try to draw you let me see if I can draw this real quick, just to have some ideas of how to see how. And again, there's no guarantees of any of this stuff. This is just the way that I personally see when tops are coming in. So this parabolic move, and forgive my crappy drawing, but like when it's basically shooting up like that, it's just not healthy. That's just it's fun. It's awesome if you come in from like this little market structure here at 265, you bought in, especially with options. You did a killing. It's awesome. But you also got to learn how to take your profits, and I highly suggest this is a period to take profits, at the very least, take 2/3 off or ride the rest. You're riding on free positions. That's the way I see it. But hey, I'm not a financial advisor, and you should always do your own research. So this is on the weekly. So on the weekly, I would definitely keep an eye out on this trend line. So I'm not going to dive in too much on the monthlies and the weeklies. I'm going to look more on the daily, but just to briefly touch on the weekly here. The rest of the videos that I've done on Tesla might give you a better idea of that. So to draw another trend line, this is on the weekly where I would kind of keep an eye out on. You can see here if you bought it, this little market structure. So this is like a W within a W. So market structure within market structure. So you have this basically this W right here. And then within it, you had another little W there. So, I mean, how much more beautiful structure do you need than to buy in at approximately this level here? And sure enough, at the breakout of that level, it broke out. Yeah, not the best, not the smoothest talker I am. So yeah, basically that's let me draw another trend line. It's getting so steep, and that's one of the reasons why I'm like, you know what? It's a heads up. So this one right here would give you even more a quicker idea of something rolling back. So now let's dive into the daily. So obviously on stochastic, on the RSI and stochastic on the weekly, it doesn't look that bad. It just on the stochastic, it broke below the 80. Nothing. I mean, it's a warning, but it's not a death sentence there. And to be completely fair, on a weekly, the RSI, in my point of view, looks strong. It looks really strong. So I wouldn't be full on bearish. I would just be looking for more of a pullback, in my honest opinion. Now, remember that we do have divergence on the monthly. Now, let me dive in on the daily. The daily is a little more interesting because, the heck is that? Because we have a little bit more action and a possible double top forming here, which I believe it's going to form. So there's 36 minutes left on the day. So yeah, so that looks very double toppy who knows what happens in the next couple of days. But you know what I'm going to do? I'm going to add a 10 simple to this because I think it might respect it a little bit better. Either the 10 simple or the 10 or the 9. I usually like the 10. It just fits more charts from my perspective. So yeah, I'm going to put that sucker on. And you can see that it actually respects the 10. It actually uses that as support pretty much since the initial run. We had a little bit of a break here, but then ever since December 5th, it's pretty much used it as support. So yeah, we did break here briefly, but closed above, went above, touched the 10 simple, once again, had a little bit of run up, 10 simple, got close, but I would consider that kind of a little bit of a support. It did break, it opened below but closed higher. So pretty much on the daily, we've had consistent just support of the 10. So, but here's kind of something that I'm noticing right now. So this 10 is starting to flatten out a little bit. So it's going more neutral. So we have to see what happens with price in the next couple of days. Is it going to turn over, meaning that, because the 10 is more of a short term, it is a short term trend. So we have to see if that starts to kind of flatten out and roll over. So then we may see a small pull. That would confirm a small pullback. This is kind of like another little bit of a warning. And then we've had some divergence in the past. So we had like this section right here. We had higher highs. Stochastic was relatively flat again, but we had higher highs. Here for sure we had divergence. You can see here we had a lower high in RSI, yet we had the higher high in price. And then we had this nice little run for the all-time high. And ever since, we've been kind of collapsing a bit. But here, this little section right here, this sucker, that's what's giving me a little bit of a warning. So that's almost like a little bit of a doji spinning top kind of thing going on. So that is a possible double top. So that's one of the reasons why I want for this to be more of a public service announcement than anything else. Yeah, it's an update on Tesla, TSLA, but I just don't want for people to get wrecked. If you're in profit, if you bought in earlier and you see any gains, it's a good idea to take some profit. At the end of the day, nobody knows what's going to happen. This is not a guarantee. I'm not a financial advisor. I've said it a million times, but I'll say it again. But in my honest opinion, this is starting to look a little bit toppy. At the very least, expect a small pullback. But if you can take profits, why not? Take a profit and be done with it. So to draw some extensions to see if any of this stuff correlates, let me see if I can get my magnet on here. So this is a little run there. And again, different people draw extensions many different ways. This is just the way that I particularly like to draw it. Some people do it from the opposite retracement. I don't know what to tell you. I mean, the results are, at the end of the day, they're very, very similar. I've seen trend-based retracement extensions. I've seen these type of extensions. I've seen extensions like this. Yeah, I don't know what to tell you. All I know is that mine's works for me. So we have this extension right here. The 1.618 was, if it wasn't hit, it was pretty darn close to getting hit. So I'd say that that was a nice little run. So now we shift up there, and we see that the 1.618 was hit over here. It was a little bit short here, but it did hit around here. So I would consider this to be the next trend run. And then a small pullback. So this 1.618 pretty much hit at this this candle bar. So this candle bar not only started at the 1.618 and finished nearly the 2.618, which is kind of crazy if you think about it. So we are a little overextended for that particular run. But if you wanted to kind of see where we may have an extension. So this particular extension, so the first stop will be the 1.318 at 1,024, and if we continue seeing the 1.618 targets, we're looking at 1,234. Now, let's go back and get a better extension idea. So let's go from this swing low, and we can probably do it to the swing high over here. One of these at the horizontals. That looks pretty decent to me. So we had the 1.618 get hit there. 2.618. You know what? Let's take it to near the ultimate high. Actually, we can do this one right here. And you can see that the 2.618 matches almost on the spot with the 1.414. That's pretty up there. So the 200% matches pretty much where we are now. So anything above that is, in my opinion, overextended. If you want to not go as crazy and go from this low here, the 2.618 also matches on 903. So 903 and then 910 on the 200. So we have a lot of confluence at this 910, 911 level, which is exactly where we are right now. So I just see, honestly, a small pullback, which we did actually, Let me see here. We had that small pullback. So let's say this goes a little bit higher. So let's not call this as a double top. Let's say it goes above. We want to be bullish. Let's say we want to be FOMO-y and think that we're going to go ape crap. A target between 1235 and 1,025. And yes, $200, but hey, you're already looking at $1,000 stock pretty much. So that would be a decent target. But I see things being a little bit overextended. The stochastic actually broke under the 80, tested the 50, which is bullish, and it actually went up higher. So there's no, it could go to one of those peaks. This is more of just a warning. Don't, in my honest opinion, I honestly don't think that you should be buying, anybody should be buying at these levels. You should wait for a pullback, something that's going to be healthy, something that's going to be in your best interest. You want for things to be at your advantage. Things eventually roll back, everyone. I mean, it is what it is. It's a reality. So if we do expect a rollback, where do we see? So I would honestly, I mean, the first stop would be the 382, which we almost had here. I would see at least a test of the 382, and it would remain very bullish if we maintained above this 50% level at the 576. I think something like that is think about it. That would be a 50% pullback from this low in June of 2019. So a pullback from all-time highs to swing low of June in 2019, that 50% level gives us, let me see if I'm getting this right. Yeah, it does. It gives us a 50% level at $576, which would be doom for a lot of people. But that's actually not bad. And it actually is above this trend line. So that would be still a healthy retracement. Even if we did a retracement to 61.8, it's not best case scenario. But as long as you're above that 61.8, it's still bullish. But if we could stay above this particular steep trend line, you're still at the 50% level. So it can retrace 50% level, be above this trend line, and it's still uber bullish. So, I don't want to pretend like I'm sounding like I'm like this ultra bear or something like that, because I'm not. I really don't care if it goes up or down, as long as I'm able to make the right call and make money. So, a lot of people I see make a lot of emotional decisions with this stuff, and I really think it's a bad idea. I know it's easy to get emotional about it, and you think about Tesla, and you're like, oh, they're doing good, they're going green, and they're doing this, and they're doing that. But at the end of the day, a stock is not going to respect what you think. It's emotional. It actually behaves. It's a crowd, and people act irrationally, and so are stocks. So it's better for you to have a clear mind. And I know it's hard because of people FOMO and FUD and blah blah blah. I'm just trying to give a different perspective, and hopefully this is of some value to you. So if you're, if you have some money and you were thinking about throwing it into Tesla now, of course, there's a chance that it's going to keep going up. And anything can happen. It can go to the moon. It can go to 1,500. It can go to 2,000. It can go who knows what. It could go to zero. So why not be smart? And in my opinion, this looks technically a little bit, a little bit toppy. Now, granted, there is, to be fair, there is arguments of this being a W, and by breaking this here, you would have it's bullish, and it's not wrong. So you have these targets here. I just think that if you're in a position already, take your profits, and then just sell 2/3, sell at least half, and just go and play with free money. If you're about to get in, just play, set your targets, make sure your risk management is correct. Always consult a financial advisor, but I would risk not below here, honestly. So let's say your buy-in target is, or was, you see, like, in my opinion, it's already too late. But if you can get a retracement to this level here, which is the 819, let's say 820. So let's take this sucker now to around that level. Risk no more than the 38.2, which is just below this little peak right here. A lot of people would actually keep it tighter and just go here, which you could. I mean, there's nothing wrong with that. Keep it there and look for a 2-to-1 or a 3-to-1. This right here, to be honest with you, makes all the sense in the world. So here you're being super conservative if you're bullish, and hitting the 1.13, you have an exact 2-to-1 risk reward. I mean, that's awesome. Granted, this is if price comes down and gives you a fill here at around 820 or so, 819. And if you can, if you actually did buy in, you can actually unload some here at the 1.272, and then an additional, the rest of it, I would probably think about dumping here at the 1.618, and then, or if you want to be ballsy, excuse me, ladies, I don't want to sound rude, but if you have the courage to hold on to your position and have your target at the 1.618, I mean, that is a 4-to-1 risk reward. I mean, that's awesome. That's awesome. If you do that, I don't see why not. And if you even brought this down to that 38.2, we're risking to the risking down to the 38.2 of this larger swing low, swing high Fibonacci level, and then the extension of this 1.618. I just don't see, as long as that's your plan and you consult the right person, I can sort of approve that. But that means that you're trading. You're not really investing in this. Your goal is to pretty much be a stock trader there. Now, if we take that same extension and roll out of the way back to that swing low of June, and yeah, you still have a target. You bring down the target a little bit, so that way you meet that 2.72, and you're still risking all the way down here to 38.2. You're still above a 2-to-1, so I see honestly no problem with that. If you keep it tighter there and risk where this 20 EMA in yellow is protecting you, and you can risk to the same amount, you have a 3-to-1. You can actually bring it down to the 1.13, this is a very aggressive. I mean, conservative. This is a more conservative trade. You're still at a 2.3. That's pretty solid, really. And if you wanted to go all out to that 1.618 on the daily, you're at 1460, and that's a 6-to-1 trade. So at least risk reward wise, this would make sense if you're thinking about considering a trade, not an investment. This is not a long-term hold. If you're doing a long-term hold, I would honestly suggest that you wait for a pullback at the very least 382, preferably down to, I would honestly, if it's long-term, I would wait between the 618 and 786, so between 483 and the 352 pullback. It may never get there, but that's where I would start, looking to get some long-term positions in. Yeah, that's basically what I wanted to say. There's not much else. Always consult a financial advisor. I'm going to sound like a dad or a broken record, but just it is what it is. It's just going to protect you. It's going to protect everybody. So be smart. Don't go emotional. If this is your trade, if you think you're bullish and you want to make some money temporarily, not a bad idea to go about it. But it's I overall, I'm a little bit hesitant to recommend anything here. Now, if this 10, gets positive, gets a little uppy, um, we'll see. But things will unfold in the next couple of days. Right now, it's looking a little spinning top doji. So just wanted to put that out there. Don't FOMO. Be smart and don't get wrecked. All right, everyone. Hopefully this helps. And like if you haven't already, and subscribe. And hopefully I'll see you on the next one. Bye bye.